Picture this. You wake up. Grab your phone. Notifications everywhere. Bitcoin hits 100K overnight. Your heart races. Your mind spins. But then reality hits. You didn't buy. You were waiting for the perfect dip. Or worse, you bought but had no clue when to sell. Now flip the script. Bitcoin crashes 50% overnight. Panic floods the market. Everyone's selling. But you? Calm. You expected this. You traded the right way. You profited while others lost. What separates you from them? Knowledge. And by the end of this guide, you'll have exactly that. Every step, every strategy, laid out for you. Crypto exchanges, the battleground of every trader. Let's cut the fluff. To trade crypto, you need an exchange. But here's where people stumble. Centralized exchanges, CEX, or decentralized exchanges, DEX. It's like choosing between a luxury mall and an underground market. Both have treasures. Both come with risks. Let's break it down. Centralized exchanges, CEX, the banks of crypto. Think of platforms like Coinbase, Binance, and Kraken. They're polished, secure, and easy to use. But there's a trade-off. They hold your keys. Why does that matter? Because in crypto, if you don't hold the keys, you don't truly own the coins. But there's a reason CEXs dominate the market. They make getting started a breeze. You can buy crypto with a credit card, bank transfer, or even PayPal. Their security measures are top tier. Multi-million-dollar systems protect user funds. Plus, they offer deep liquidity, meaning you can trade large amounts with minimal slippage. CEXs also come with advanced trading tools, futures, options, margin trading, allowing pros to maximize profits. But here's the catch. They hold your private keys. If the platform freezes your account, you're locked out. They're subject to government regulations. If laws change, your access could too. Decentralized exchanges, DEX. Total freedom, full responsibility. Now let's talk about Uniswap, PancakeSwap, and SushiSwap. No middlemen, no ID checks. Total freedom. On a DEX, you control everything. Your funds, your trades, your risks. There's no waiting for account verification. Connect your wallet and trade instantly. Privacy is key here. Nobody needs to know who you are. Plus, DEXs often list new tokens before they hit major platforms. If you're hunting for the next big gem, DEXs are where you'll find them. However, freedom comes with responsibility. Gas fees on Ethereum can burn your profits. A single swap might cost $50 or more when the network is congested. Liquidity can be an issue too. Some tokens might not have enough buyers or sellers. And remember, there's no customer support. Make a wrong transaction? It's all on you. Choosing the right exchange. What's best for you? It all boils down to your needs. Are you new to crypto? Centralized exchanges are simpler and safer to start with. Do you value privacy and control? Decentralized platforms are your playground. Looking for fast trades with low fees? Layer 2 networks like Polygon and Arbitrum can save you a fortune on DEX transactions. How to buy crypto on a centralized exchange, CEX. Let's get practical. Buying your first crypto on a CEX is easy if you follow these steps. Sign up. Head to a trusted exchange like Binance or Coinbase. Register and complete the KYC process. Yes, they need to know who you are. Deposit funds. Choose your payment method. Credit card? Bank transfer? Choose what works for you. Buy crypto. Start simple. Buy Bitcoin, BTC, or Ethereum, ETH with a single click. Withdraw to your wallet. Never keep large amounts on an exchange. Transfer your crypto to a private wallet like Ledger or Trezor for safekeeping. Trading crypto on a decentralized exchange, DEX, ready for complete control. Here's how to trade on a DEX. Set up a wallet. Download MetaMask or Trust Wallet. These wallets let you hold your private keys. Fund your wallet. Send crypto from your CEX wallet to your private one. Connect to a DEX. Go to Uniswap or PancakeSwap. Click Connect Wallet. Swap tokens. Choose the trading pair, maybe ETH for USDC or Matic for Shiba. Confirm the swap. Watch out for gas fees. Always check the current network fees to avoid overpaying. Trading strategies. From rookie to pro. Trading is more than guessing. It's strategy. Here's how pros approach it. Spot trading, the simplest form. Buy low. Sell high. No leverage, no stress. Perfect for beginners. Day trading, buying and selling within the same day. Profits come from short-term price movements. But this requires constant attention and quick decisions. Swing trading, holding assets for days or weeks. riding the market's natural swings. This strategy works best when you can't monitor the market 24/7. Scalping. Quick trades aiming for small profits. Dozens of trades per day. Fast-paced, high-pressure, but highly rewarding for skilled traders. Hodling, the long-term play. Buy and hold, ignoring short-term volatility. If you believe Bitcoin's going to one nullum, this is your move. Reading the market. Technical analysis basics. Want to predict market moves? Learn technical analysis, TA. Support and resistance. Support is the price floor. Resistance is the ceiling. Break resistance? The price could soar. Break support? Expect a dip. RSI, Relative Strength Index, measures momentum. RSI above 70?
The asset's overbought. Expect a pullback.
RSI below 30? It's oversold. Expect a bounce. MACD, Moving Average Convergence Divergence, tracks price momentum. When the MACD line crosses above the signal line, it's a buy signal. Cross below? Consider selling. Candlestick patterns. They tell the story of market sentiment. Learn bullish and bearish patterns. Master them, and you'll spot opportunities others miss. Risk management. Protect your profits. The best traders aren't just great at making money. They're experts at not losing it. Set stop-loss orders. Protect yourself from major losses by automatically selling if prices drop too low. Diversify your portfolio. Don't put all your funds into one coin. Spread the risk across different assets. Manage position sizes. Never bet your entire portfolio on a single trade. Smart traders risk only a fraction of their funds. Stick to your plan. Emotional trading leads to losses. Set clear goals. And don't let greed or fear dictate your moves. Market psychology. Outsmart the crowd. Crypto markets run on emotions, fear, and greed. Master these and you'll master trading. FOMO, fear of missing out. Prices surge and everyone's buying. But smart traders know the best gains come from buying before the hype. FUD, fear, uncertainty, doubt. Rumors spread. The market dips. Weak hands sell. Pros? They buy the dip. Whale manipulation. Big players with massive holdings move markets. Recognize their patterns. Don't be the victim. Advanced trading tools for pros leverage trading. Multiply profits, but also risks. Only for those who can manage the pressure. Arbitrage opportunities. Buy low on one exchange, sell high on another. Profits from price differences. Yield farming. Put your crypto to work by providing liquidity and earning rewards. Trading mistakes to avoid overtrading. More trades don't mean more profits. Ignoring fees. Gas fees and trading fees can eat into profits fast. Blind following. Just because everyone's hyped about a coin doesn't mean it's a good buy. Lack of research. Always do your own research. Real-world trading scenarios. Scenario 1. Bitcoin drops 15% overnight. Amateurs panic sell. Pros buy the dip, knowing a rebound is likely. Scenario 2. A new coin launches. Hype skyrockets prices. Amateurs rush in. Pros wait for the inevitable correction, then buy. Scenario 3. RSI shows bearish divergence. Amateurs ignore it. Pros prepare for a downturn and short accordingly. The crypto market doesn't wait. Opportunities appear and vanish without warning. But now, you have the knowledge. You know how to pick the right exchange. You understand trading strategies that work. You can manage risks like a pro. So the question is, will you take action? Or just keep watching from the sidelines?